Good afternoon, traders. A few days ago, Monday to be exact, I made a analysis video on SENS. That was on April 26th. Today is Thursday the 29th. And you can see that I guess I was making this video around noontime. And toward the end of the video, I had all my support and resistance lines drawn out. And I think I probably said, I didn't rewatch this before making this one, but probably said something to the effect that if it breaks out through this level, that may be signs of a reversal, but it's not for sure. I mean, nothing is for sure, but the signs aren't that strong because of all of this selling off. You can see that this thing made all-time highs back here, sold off, and then this is a pullback on the way down. So, and that's, you only know that after the fact. I mean, while this is happening, this could be a reversal, but it would only be a confirmed reversal once it actually makes it all the way back up to the previous highs and then breaks that level. So this thing didn't get anywhere near that. It just pulled back a little bit and then it continues on down. Now it's possibly doing the same thing because this looks kind of like that. So this could either be a pullback on the way back down or this could be a reversal making new highs. So let's take a look at the chart today. So this green line here is that same level, this level right here on the chart. So I just put some other lines on there as possible ways to take a trade on this. Now, this isn't a great trade in my opinion, but if you were thinking that this could be the breakout, this is one possible safe way to trade it. So this was our resistance line. This is April 26th, this candle right here. That was when I made that last video. The end of the video, the top of the candle was over here. It proceeded to break out. So that is a signal that this thing may be reversing. Now, the next day it pulled back. So your entry, if you were playing this reversal, could be for the break of a daily candle, which happened today actually. So one possible entry as soon as the level of this candle, which if you look up here, it's hard to see because those candles are in the way. So if you look up there, 228 is the high of that candle. So as soon as this thing hits 229, that could be an entry. So I put that blue line where the possible entry is, and then the stop loss should be the low of this candle. So about 205-ish, we'll say. So 205 to 230, that's really 25 cents. Sorry, 205 to 205 to 230, 25 cents. So 50 cents would be a 2R trade if you want to do a 2-to-1 risk to reward ratio. So where are we at? 230, and I said 50 cents, so actually 280 would be the first profit target. So if it gets up to there, it's a successful trade. If it comes down and hits that stop before that point, I would stop out for sure because this thing could just be another pullback on the way down. The extreme support is back here based off of the bottom of these two candles, and it really hasn't come down to that level yet. It got kind of close back here on the 21st and then started to reverse higher or pull back, but it didn't really get that close. So there's still a good chance that this thing could come down and touch this major support level. So it's always better to trade off of more extreme support and resistance than local support and resistance. So for example, this is barely resistance at all because it's only one candle. But if you just kind of called this area right here resistance, this is the definition of local resistance. It's only one or maybe two candles if you include that touched this level, and then this thing reversed back. What you would rather see is 2 or 3 or more candles. So if this thing continued down, or if this line of candles continued down all the way to here, then you could say, okay, 1, 2, 3 times it touched this support level over the course of many, many days, really weeks, and so that becomes an extreme support. So if it reversed off of that level, then it's a much stronger trade. It has much higher probability of working out. But the fact that it's kind of halfway between a couple of levels here means that this trade doesn't have a high probability of working, or at least as high. Doesn't mean you can't take it, but if you do, you got to have a plan. Don't just think, oh, this has got to be it. This is the time where it breaks out. I know it. Even if it came down to this support level, you don't know that if it starts to reverse that it's really gonna break out and go back to all-time highs or make new highs. So even in that scenario, you should have a stop loss. And if it hits that stop loss, just take it and then try to take the next entry, and hopefully you'll have better luck the next time. So hopefully this video was helpful to you. If it was, hit the like button. If you have any questions or comments, please leave them down below and I'll try to respond. Anyway, as always take your stop losses no matter what, honor your profit target, and in the long run you should be green. Take care.